All right, I know it's everyone's favorite time. That's right, NEO earnings time. It's been a while since I've talked about this stock, and well, I think it's important to give a little bit of a talk about it. Things down 14% after reporting earnings. Again, this is a time in which the market and Chinese stocks are getting hit very hard right now, anyways. I mean, if you look at this over the past month, this is a stock which, oh, I'll get this chart to load, or maybe I won't. This is a stock. We'll come back to this for sure. Give it a little reload, see what we got going on here. Again, this is data so volatile, but this is a stock that is down pretty massively here over the past little bit, no doubt. Let's check. So over the past month, down around 40%, which again somewhat goes with the market right now. Nothing too crazy, but China's getting hit especially hard, just due to the fact that this outbreak really started there for the most part. So these stocks have been getting pretty, hit very hard because the Chinese economy was already struggling as is, and this only really made it worse for them. But let's still get into these earnings and take a peek at what they did down, to make them down 14.5%, where a lot of the market's more, down around 5%. So NEO missed on an EPS standpoint. Non-GAAP EPS of a negative 39 cents and a GAAP EPS of a negative 40 cents, which missed by 7 cents. So you hate to see that, obviously. As far as profitability is concerned, profitability is one of my key takeaways, my key tactics. I love companies that make profit. And well, this bad boy is officially, not making profit. So the question becomes, since it's not making profit, what do you do with this stock? Well, we'll take a look at these numbers and see if there's hope for this one, okay? You missed on a profit line, but what else do you have going for you? Revenue of $409.1 million, which beat by $3.77 million. So very good, but it is down 17.1% year over year, and we'll get into those numbers too in a little bit, but they did beat in terms of revenue. So one thing to consider there, company obviously almost made $500,000 this quarter, which is big in terms of money for them for sure. That's huge for a company like this. But you see, NEO says it expects deliveries between 3 to 4,000, or 3.4 to 3.6 thousand vehicles in quarter one. Naturally, over a 50% sequential drop in deliveries is being attributed to the impact of the outbreak in China. So that is rough. You hate that as far as guidance is concerned because it's ugly guidance, and what more can you expect? Everyone's, forced to they're staying home. Everyone's quarantined. It's nothing too absurd when you think about this, all things considered. So, again, that 50% seems somewhat light, actually, as far as that's concerned. It wouldn't surprise me if they anticipated a much higher number as far as that. So, maybe guidance, I don't know. Guidance seems even a little bit high compared to the fact that really they're not going to have a good outreach to further grow this company. So we'll see how things go. They expect revenue of 1.2 billion yuan to 1.27 yuan versus a consensus of 2.48 billion yuan. So huge decrease as far as revenue is concerned. Again, around a 50% cut. So very interesting. Makes sense. 50% cut in vehicles, 50% cut in sales. Not a shocker, but definitely interesting. So what else do we have to look at? Well, let's look at the specific report and pick apart these numbers and see what's going on for this company. So let's look at these operating highlights for the fourth quarter and full year. Deliveries of 8,224, which 6,824 of them were ES6s, 1,400 of them were ES8s, compared to the 4,799 vehicles delivered in the third quarter. Deliveries in 2019 were 20,565 versus 11,384 in 2018. So nearly double the vehicles they delivered from last year, which is a very good sign if you're thinking about this company from a long-term perspective. They've got a lot of potential. a very big amount of potential. And where we find that issue, and we'll see it certainly in the future here, it's going to be with how's this company going to survive this nightmare that's happening to the Chinese economy. Well, obviously they did just recently secure financing, which should get them through the end of this year regardless, but it's going to be tough because this company is going to have to find a way to get profits. It's going to have to find a way to remodel this business towards profitability. If you think about a company like Tesla, they still are trying to work on profitability. So all things considered, I think NIO certainly can get some time. They just really need to get funding in the meantime, people to back them, and I think they're a company that can get people to back them because really, you see the justification in the numbers there. You see the growth in terms of deliveries. You see that. You see the growth in revenue, and I think really with that growth, they're a lot more likely to get investments in them. No doubt about it. My concern here with this stock specifically is that there's a decent chance that they will have to raise capital as opposed to, get other people to invest in them. I think they might have to raise capital and dilute share price. Now, if that happens, obviously, we'll take a look. I certainly plan on buying more of this stock if it goes below the $2 range. I'll certainly consider it because I think it's fair. I think share dilution could bring this thing even down to 150, but I think anything under $2 I would take for this stock. Let's continue looking at these. So see if I change my mind or anything. What do we have going on here? So for vehicle sales, 2.68. Truly, we care about these U.S. dollars. So vehicle sales made up $385.5 million in the fourth quarter, representing an increase of 54.8% from the third quarter, but a decrease of 20% from the same quarter of last year. So interesting stuff. Vehicle margin was 6% negative, compared to 6.8% negative in the third quarter and 3.7% in the same quarter last year. So margin went down. Obviously, that means, selling price of the vehicles went down as you see that vehicle sales there. So total revenues of $409.1 million, representing a 55.1% increase from the third quarter and a decrease of 17.1% from the same quarter last year. Gross margin was negative 8.9%. The goal is to get that, to a positive number. You think about, again, a company like Tesla, they were not making a profit on vehicles for a long time that they were in business. They're finally working on that. They spent a solid, 10 years without profitability. So there's definitely reason to be concerned. But this could be a long-term, good potential investment if you see them give the opportunity to turn things around. So loss of $406 million, which is definitely tough because of the fact that, obviously they have a worse quarter coming ahead of them because of all of this nightmare happening. They've got a worse quarter ahead of them, and they lost $406 million this quarter. Definitely not the number you want to see because I hate unprofitable companies, and I hate the fact that they lost that much money, especially when they secured $1 billion worth of funding. But quarter four is a big quarter for them, so what do you expect? My concern, though, is as they continue to increase vehicle deliveries, are they going to continue to completely increase this loss from operation? I certainly hope not, because it's definitely not an exciting number. So they increased loss by 17.3% from last quarter, but they did decrease it by 18% from the same quarter of last year. So they did nearly double vehicles from the quarter prior. They only rose the loss by 17%, but they did decrease at 20% year over year, in which they delivered more vehicles. So again, it's numbers like that where you see an awful loss number, but you see progress there. You do see the fact that they are progressing and trying to be beneficial, to shareholders. They're trying to make it work. So I'm slightly excited by that. We'll see how that goes. I think that's a good positive thesis for an investment here. So net loss of $411.5 million, which was an increase by 13% from the last quarter and decrease of 18.2% from the same quarter last year. So you gotta like to see that. In my opinion, you like to see that as well. As far as vehicle sales, quarter over quarter, you see obviously 54% increase in vehicle sales. Margin down 9.7% year over year is one thing to look at. Definitely not something you like to see, but a lot of these decreases year over year. There's this ending. These guys right here, these bottom ones, oops, that's the wrong highlight. These ones highlighted are the ones you want to see a negative on the year over year. So you'd like to see that, but you'd also like to see a positive on these top four too. You would, but you can't necessarily expect everything. So definitely something exciting. You see from a net loss perspective for the full year, they lost $1.6 billion, which was an increase from the previous year by 17%. You don't like that. So the thesis on that really is, well, it's obviously tough because they had just started really delivering vehicles last year. So you expect to see an increase in that, but they also increased vehicles overall for the year by twice the amount. I mean, they've sold twice the amount of vehicles, but they only really increased their loss by 17%. So I think there's a positive aspect to really look at that. So in my opinion, I think you can look at that in a positive manner, in my opinion at least. So from the CEO, I'm just going to share their comments real quick. So we delivered on a combined basis 8,224 ES8s and ES6 vehicles in the fourth quarter, representing a 71% sequential increase from the prior quarter. Cumulative deliveries of ES8 and ES6 reached 20,565, an increase of 81.2% from 2018, says William Li, who is the founder, chairman, and that's right, CEO. As a leading premium smart EV brand in China, electric vehicle that is, we are proudly serving 34,218 NIO users across 296 cities in China as we end February 2020. So very big outreach this company has. The question is, where do they expand out of China though from here? Where do they find that growth at? Because I think they certainly could find success elsewhere other than China, but they're finding good success in China as is. There's a lot of untapped potential in the Chinese auto market because a lot of people really don't drive there. But a lot of it's the lifestyle. They maybe aren't, wanting to drive. But regardless, the ES6 was ranked number one in electric SUV sales in China for the 5th consecutive month. So very crazy since October 2019. That's crazy numbers there. So these guys are selling vehicles, no doubt about it. So definitely exciting to see what's going on there. So ES6s, obviously you saw sold 6,000 units around there. So we are starting 2020 in a challenging environment due to the outbreak. While we keep safety and health of our global employees a top priority, our team strives to resume productions, expand our traffic channels, integrate for online and offline sales efforts, and offer best services possible to bring business and operations back to normal. Looking into 2020, we are confident that we will produce the most competitive electric SUVs in China, including the ES6, all-new ES8, and the EC6, which should be releasing later this year. Together with more comprehensive battery and power solutions, we are pleased to see our growing user community becoming an essential part of our brand and business growth. We have covered 59 cities with 22 NIO houses, 62 NIO spaces in China. We are efficiently support our branding and sales effort. We are well prepared to proceed through the headwind and become stronger in 2020. So obviously confident words from William Li here, as he says that they plan to move through it. So what else do we have? We'll have here from the CFO. We are pleased with our financial performance in the fourth quarter, with the top line growing 55.1% from the previous quarter. We have put great efforts to optimize organizations and to improve operation efficiency, which resulted in certain one-off expenses in the fourth quarter. So again, that could be part of the increased expenses too. We believe that these efforts will significantly reduce our operating expenses, improve cash flows in 2020 and beyond. I like to hear that. We will continue to improve operational efficiency in all business fronts to bring positive changes to the performance of our margins in the future. I love hearing that news. I love that. Additionally, we made several private placements of convertible notes in February and March 2020 in aggregate principal amounts of $435 million US dollars, which supported our daily operations and business development. On February 25th, 2020, we entered a collaboration framework agreement with the municipal government of Hefei and Anhui Province, who expects to provide resources and funding support to NIO to establish NIO China headquarters in Hefei for long-term growth. The parties are working together on legally binding definitive documents to be signed. Love to see that. You love to see that. So obviously this is just really more going into what we already talked about here as far as these numbers are concerned. So nothing too wild. So from a balance sheets perspective, I don't think they will show it on here, which is exciting because typically this company kind of keeps it a little bit hidden. You don't like to see it, so let's take a look at that. So obviously you see outlook. We looked at this delivery outlook, and then revenue. We looked at that outlook as well. The business outlook reflects the current and preliminary view on business situation and market conditions, which is subject to change. So obviously this first quarter is going to get hit pretty darn hard, no doubt about it. So as far as what this company's got rocking for it, we want to take a look at, as of December 31st here, is the most recent numbers we have from a current assets perspective. In US dollars, they've got $123 million in the bank, $124 million as far as just current assets. You don't really like to see that. Cash of only $11 million. You'd like to see a better number than that. I think there's no doubt about it. But from a total assets, total current assets perspective, they got $707 million. Total assets in general, they've got $2 billion. From a liabilities perspective, total liabilities are currently $1.3 billion, so almost twice the liabilities that they have in terms of current assets. And what I do like to see here is, as far as total liabilities as a whole, is $2.7 billion versus a $2 billion in terms of total assets. So you do see a little bit of a headway in terms of that, where, they've definitely increased liabilities, no doubt, but it's just, they're making some progress here. The company's doing a lot of things. There's a lot of things on the go, so nothing too shocking about an increase in debt, just due to the fact that the company isn't making money, and they're increasing margins or revenue at the same time, so you expect that money to decrease as far as cash flows, but they plan on increasing that. I'd like to see the plan for that personally, but the question becomes, is NIO stock a buy? Well, I think NIO is a very interesting pick still. I do think there's more room to go down on this stock, but that's gross. I didn't mean to say that, but I think the stock could go down certainly more. I'm excited to see where this thing lands up, but I think it's doing a great job as is, in all honesty. The stock's doing well, for sure. So I think the company's doing well, in my opinion, and I think this is a company that will be fine. I think in the short term they're going to be hit very hard, but I really believe in the long-term vision of this company as another big electric vehicle player, as Tesla is right now. I think NIO's got a very good potential to be obviously the leader in China as far as electric vehicles is concerned, and then from there they could expand onward. Obviously they make electric vehicles, so you're like, it's just Tesla, and Tesla will beat them out. Well, the main difference between them and Tesla is the models. Models of vehicles are always different. People aren't just going to buy a Tesla. Well, sorry, I need to rephrase that. Most people aren't going to buy a Tesla just because it's a Tesla. It's typically going to be for the appearance. If they're buying a car, they want the appearance to look nice. Obviously, buying a Tesla shows that you have some money, so that's kind of a flex in that way, but I don't necessarily, I'm not too bent out of shape about it. I think people really care about good looks on a car, and I think the EC6 coming out for NIO looks fantastic, and I think it'll perform extremely well. So I think you're going to have a very good 2020, but the stock is going to get hit in the short term, no doubt. So overall, I think the stock's not ready to buy yet. Give me something under $2, and I'm all in. But hope you enjoyed.